Bitcoin has reached the next major area of support, sitting between 21.5 and 21.8 thousand. In today's video, we're going to discuss the possibility for a bounce and reversal at this support zone or a continuation and prolonged crash. Let's go ahead and jump into it. Okay guys, welcome back to the channel. Thank you for tuning in to another video today. We're here to talk about Bitcoin and the potential for a bounce / a continuation toward the downside. Now Bitcoin has broken downwards from that rising wedge formation, rejecting from 25k and officially reaching our primary and first higher time frame bearish target, which was 21.5 to 21.8. This is a level we have been discussing for weeks now. We were talking about this ever since we reached this higher zone between 24.4 and 25k, expecting that retracement and pullback towards this lower support. So we'll talk about in today's video the possibility for a bounce, how high could a bounce take us, what the macro charts are looking like, what the technicals are looking like, and of course the short term. We'll also talk about our lower targets and the probability of a continuation downwards, going over market data, traditional markets, and of course economic news. Jam-packed today. We'll try to smash it out. Now before we get into it, smash the like button, hit that comment button, subscribe to the channel guys. Obviously we do daily videos for Bitcoin. We talk about absolutely everything in between, such as the things mentioned just prior to this. You can also find us on Telegram if you're interested in more information. We're going to have updates, we're going to have news events, we have charts, we have everything in here guys. News releases, like I said, all of our videos. If you want to have more information on the markets during the day, excluding just the videos, go ahead and join up. That is the second link down below. Make sure you are joining the correct one. There are a few fake ones out there. Now, if you're interested in trading, you can join the VIP channel. You can see the VIP channel over here. I'm going to go ahead and click on it. This is our VIP channel, 520 subscribers to our VIP channel, which is awesome. You also do get access to our VIP group chat, which is our scalping chat with all of our members. Again, membership information and our trading track record can be found in that free channel. You can see all of our trading track record since February 2021. With the VIP, you get access to specific trades with exact entries, exact targets, exact stop losses, such as that one over here. Let's get into the video guys, starting off with the market data as per usual. For the month of March, we are down 5.88%. We are 9 days in, so 1/3 of the way through. And as expected, excuse me, March was going to be a red month. Not only was March likely to be a red month based on historical data, you can see already March is generally more red than it is green, but looking at the larger time frame, looking at the candle close of February after what we saw, which was a massive January month, we did know that March was more likely to see a move toward the downside. The reason being is because we had a few technical indicators suggesting so. We had a rejection from the 50 EMA, okay, on the monthly chart. We had a rejection from the 200 moving average on the weekly chart, as well as a rejection on that Gaussian channel. But more importantly, we had a DOWJ candle print on the monthly chart right after an aggressive move toward the upside. This is a signal of reversal, a signal of weakness, a signal of indecision, and of course what we have seen from there is a red candle print. Again guys, 22 days left in the month. We're about one third of the way through. The markets are not looking very good right now, but when we are at support, we do have to consider the possibility for a bounce, and we'll discuss all of that and more today, as well as going back over the technicals on the higher time frames. Moving on from there guys, volatility excuse me, again, is 2.67% for the 30-day period. You can see that the volatility over here, if we go ahead and zoom in, is starting to dry a little bit. We are starting to plateau just a little bit over here in the volatility. On the 60-day period, we can see volatility is still rising, up from 2.60 to 2.63. 24-hour liquidations is at 41%, pushing over $100 million. And our 24-hour volume is sitting at 74 billion. So not massively high, but obviously not low as well. Looking at our liquidations, we had a lot, and I mean a lot of long liquidations, around 90-ish% on average of longs were liquidated, or total liquidations accounted for about 90% longs on that aggressive move toward the downside. A lot of people were expecting a bounce, a continuation upwards, but as we said already, guys, the price will move to low volume ranges. Looking at the structures to determine the next moves, looking at the smaller time frame technicals to identify trigger points, and trading with the charts rather than trading with emotions. A lot of people were longing in this range over here in this consolidation, which was very, very clearly a bearish consolidation. Although people would lead you to believe it wasn't, we had decreasing liquidity, decreasing volume, decreasing momentum, decreasing velocity, all while in a upward consolidation. This is about as bearish as you can get, guys, and the result was a continuation down right into our target range as per our analyses over the last couple weeks. So great to see that play out, and congratulations to everyone who has been following. If you were not following, if you're new to the channel, obviously when we do analysis, we focus on the data, the facts. If you cannot support your claims without data, your claims have no leg to stand on and is purely emotional, okay? Looking at the charts, guys, the DXY is on the climb once more. It has pushed up to 106. We are facing a little bit of resistance over here. We could potentially see the DXY drop back a little bit as the market is at support. Of course, if the DXY does pull back, we could potentially see a bounce play out from this range. That is definitely likely. Looking at the Dow Jones, we can see a pretty strong rejection from that uptrending resistance of that symmetrical triangle formation, resulting in a pullback, a measured move that would suggest that we do have quite some time to go toward the downside. Looking at measured moves, they don't accurately predict the next target, they give you a range. So looking at the next major support on the downside move, which is sitting at 32,000. So the lowest we do predict the Dow Jones to rally towards, or drop towards, should I say, is going to be 32,000, obviously reaching 33,000, our first target already. S&P 500, similar thing, breaking down and rejecting from on a retest from this 4,100 range, currently lost the 4,000 range already, not looking very good and looking like a move toward the downside again. If the DXY continues upwards, these downside moves will most likely play out. And finally, bond yields have pushed past that 5% range. That was our target. We ended up saying 5% was our target this entire time, ever since we retested the bottom of this wedge. Been aiming for 5%. We've reached 5%. The question is, are we going to top out now, as we are printing some degree of a divergence? But again, these indicators aren't always the most important when it comes to these economic drivers. What we're looking for is, of course, economic data coming out very soon, which is going to be, of course, the FOMC meeting on the 23rd. This is Australian time, by the way. Looking at, more importantly, CPI on the 14th, okay, huge one, and NFP, which is going to be tomorrow night, so about 32 hours away. All of these things have the potential to shift the DXY, and of course, if the DXY does get a shift, this is going to be a direct reflection of the strength of the dollar, and the strength of the dollar is directly correlated to the price of its assets, and therefore, it doesn't really matter how the technicals are looking too much today. We will still talk about it, but over the next few weeks, we're going to see a lot of volatility and a lot of reliance on this data, particularly based on where the market situation is currently at. Let's go ahead and discuss Bitcoin. We'll start on the macro. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening today, and then really break it down from the macro. So looking at the macro, starting on our weekly chart, a few things I want to point out. Number one, guys, we have rejected and confirmed their rejection. I want to make that very clear. We've rejected and confirmed their rejection from 25,000. 25,000, and we'll go over that really quickly, is an incredibly important level to break above for us to see any sort of uptrend to develop on the higher time frames. The reason being is because 25k from not only a structural but technical level acts as a higher time frame trigger for a macro reversal. Okay, we are definitely at the bear market according to our structures, but we are in a reversal phase, a phase that's going to determine whether or not this reversal develops into an uptrend or whether or not a downtrend continues. And 25k, 25,000 is that trigger point for that confirmation. Looking at the chart from a structural stance, this is going to be a 260-day resistance sitting at 25,000, a major horizontal trigger. It represents the local top in our falling wedge. Not only that, guys, but it represents the 50 EMA on the monthly. The 50 EMA being a medium time frame moving average, which represents the overall strength of the trend. When we're above the moving average, we do signify a uptrend. How far we are above the moving average signifies the strength and the momentum / velocity of that trend, meaning this over here is a uptrend, right? We are an uptrend. However, this over here indicates a very volatile and strong uptrend. As we start pushing away from, the distance increases, the strength of the trend increases. As we push towards, we enter consolidation, we enter a pinch territory where we either bounce or reject. And what we're seeing here is we're seeing a rejection from the 50 currently on the monthly chart. Again, we are looking for a monthly candle close from that 50 EMA to confirm a break above. Once we get the monthly close over 50 EMA, that will be the first point of indication that the downtrend or the current rejection is over and we are entering a macro uptrend. This macro uptrend could facilitate a continuation upwards to retest our yearly lows. Yearly lows of this cycle is 28 to 30k. Prior cycle we saw around 6,000, and our first cycle we saw all the way down around 350. You can see every single time we close a monthly candle above the yearly low of the prior cycle, we end up rallying into a bull market. That bull market will never close a monthly candle back below that prior yearly low ever again. That trigger point is $30,000 for the current cycle. So breaking over 25k is not only incredibly important on a horizontal chart, on a technical chart, but structurally for the price action to develop an uptrend, it is a necessity. Currently, we have rejected from the 200, the Gaussian channel, and created a double top at this level, making this point of resistance an even more difficult point to reject or continue upwards from. Looking at the chart from an inverted standpoint, you can very clearly see a double bottom at the 200 moving average support, at the Gaussian channel support. The likelihood of continuation upwards, which would be inversely downwards, is actually quite high. The question is, how low will this go before reversal? And that is what we're going to answer when we go down to our smaller time frames. So currently, the confirmation for a continuation downwards even lower, okay? And our lower targets are as follows, really quickly. Our lower targets are as follows, 20,500, okay? I'll go ahead and join 20,500, which is going to represent kind of this horizontal support resistance range that we had for quite some time. It's around about this little bit here. If you remember this period over here with this long stretched out neckline where we had this volatile move over on CPI release over here, this is going to be our first target, okay? Next target is going to be 20,000. Now 20,000 is important because it is a psychological support range, okay? It's not really a major support, but it's a psychological support. And below that comes up to our two major supports next, which come up to 19,200 to 18,200. This is going to be the strongest point of support. Not only the strongest point of support, but the most important level we need to remain above if we do want to have any potential of creating a low that will result in a continuation back upwards past 25k. If we lose this support level, we run a massive risk at filling this gap all the way back down to 16,000, 17,000 guys, and potentially creating a new low along the current diagonal trend line, which will take us to 13 to 14K. This is a potential, this is a possibility, but it is incredibly unlikely while we remain above this support, and even more unlikely if we bounce from this level. So it's always good to plan for the worst. It's always good to have the details outlined, understand the potentials, line it all up, and you can execute when the time comes. The worst thing you can do as a trader is be narrow-sighted on one situation. And that is why I tell my followers, do not be a bull, do not be a bear. Do not align yourself with bullishness, do not align yourself with bearishness. All that it's gonna do is blind you to 50% of the question. I have flipped from bullish to bearish many times. If you take this instance, for example, I was bearish since, and you can go back on the channel and watch this, guys. I was bearish ever since about $61,000. I expected the top to be in. I actually called for a breakdown to $22,000. That was my first target. That was the weekly 200 moving average. At the 22K level as a loss, I then called for 18,000. We hit 18,000. I then called for 16,000. And ever since $16,000, when I discovered this falling wedge pattern, I called for a retest of 25K, which we reached. And ever since 25K, I've been telling you guys we're coming back to 21.5 to 21.8. Again, guys, it doesn't take a rocket scientist to identify this. You have to follow and trust what the charts are saying and use economic data as drivers and justification for your macro analysis. Be very careful in what you believe, and be very careful at over trusting technical indicators on higher time frames. If you're going to predict reversal points, you're not going to do it with technical indicators. You're going to do it with structural and volume analysis. Do not use technicals on higher time frames. If you want to predict reversals, use them to predict the overall trend. So let's get into the crux of it, guys. If we fall through this level, we are going to be heading toward 20.5 to 20K. This is going to be the next support. If we lose our support, we head down here, okay? Those are our lower supports. If we bounce from here, the potential reversal points for Bitcoin could take us to 23,000, anywhere along this rising wedge, okay? Or of course, back to 25 to 24.5K. Those are the key points. So let's go to the small time frame and talk about what indications we're looking at and the trigger points we're looking at for these moves, and then we'll finish up with a technical analysis. So back to a small time frame. Let's take a look at what's going over here on a small time frame. We know where those levels are now. We go down to an hourly chart. So for a continuation upwards, guys, we do need to see a few things. Let's go ahead and do a technical and structural analysis. We'll go ahead and draw in some trend lines. We have our overall downtrend over here. This is our downtrending resistance. In fact, what we can do to make it a little bit more clear, we can actually apply an arrow to the end of it. So this is our current downtrend that we are in. Therefore, the trend is expected to continue down until this downtrend breaks. So we are watching this trend line for a reversal. When this trend breaks and finds support, we are then looking for a reversal and continuation toward the upside, okay? The upside take us 23K, 24.5, and potentially even 25K. As you can see on the charts right now, we are in a larger time frame descending channel formation. A descending channel formation is a bearish downtrend, but it is a bullish consolidation in the sense that we eventually do see, to a greater probability, a upward reversal. Now, the probability is around 70-ish%, about 68 to 70% of a possible upside reversal. However, we don't have confirmation until we break above it. Until then, we expect this downtrend to continue, and as per descending channels, downtrends in descending channels can continue and retest the bottoms and tops more than 5 times. So you can see multiple retests and extended continuations of this trend. However, looking at it from a structural standpoint, this is an indication that we could potentially be seeing a reversal from this range, if not this range, from the lower range, which is going to be sitting around 25,000 or 20,500 at some point in the future. So if you're looking at the charts today, if you're analyzing the charts today, you do need to understand the potential for bounce now. There is really a potential. There wasn't a potential before. This range is where we should be looking for reversals, and there is a real potential. So let's play our best case scenario. If we bounce here and break above this trend line, where could Bitcoin go? We take a measured move from first high to first low. We apply to the breakout point. Let's assume the breakout happens immediately now. That will take us to 25,000. Assume it doesn't happen now. Assume it happens on the 14th. That takes us to 24,500. Still within that 24,500 to 25,000 range, which will facilitate another retest of this higher time frame resistance. Again, another breakout or analysis can be done at that point. Now guys, I do want to go ahead and say it doesn't really matter too much what's happening here on the charts, because we do have CPI, we have NFP, we have FOMC coming out soon. All of these events can invalidate, confirm, shift, change the market environment and change the price action, irregardless of what the technicals and the structures are saying. If we have very, very bad data and the perceived systematic risk, so the risk in the market shifts negatively, we're going to see the prices fall. It doesn't matter if we're in a falling wedge, an ascending channel, rising volume. It doesn't matter what it is. If we see poor data come out, we will see the prices fall. So you do have to know that moving into economic data, there is a degree of risk that you cannot know of, and it is unknowing. You can't predict, and you will not know what the result is until the result is out, and therefore there's an element of risk when you're trading these periods that you cannot control. Okay, be very much aware. From a structural standpoint, we are bullish. We have double bottomed, we have formed a descending channel. From a higher time frame standpoint, we are bearish. We have rejected from the 50 MA, the 200 moving average, the weekly Gaussian channel, and the 256-day range. We have pulled back a decent amount already, a strong pullback of 14%. No small pullback. Do not be someone late longing. You're not looking for late shorts, sorry. You're not looking for late shorts until we have structural confirmation of a continuation down, which we do not. We are at support. We are looking for bounces. We are looking for longs at this level until we are invalidated, until this support zone is lost, okay? Do not do it the other way around. Do not be a fool and jump into late shorts. Your shorts should have been taken during this period, during this ascending channel formation, during our 25K top. A lot of people were into late shorts now. Do not be that fool, okay? Play it smart, play it safe. Make sure you manage your risk and make sure you look at the charts objectively. You can go ahead and invert the chart. What would you do? What would you do here? You can see that we have come up. We have retested this zone twice. We are backing out. Would you be more inclined to short, or would you be more inclined to long? And if you would long, when would you do it? Would you do it now, or would you actually wait for a breakout above this resistance? When you flip the bias on yourself, when you flip the charts on yourself, the direction and the decision becomes more clear. You eliminate any subconscious or conscious biases you have, and you can look at the charts from a different perspective, and a perspective that can add clarity to your analysis. Let's really quickly finish off, guys, because I'm really stretching this video thin over here, with a quick TA. We'll wrap up the video in 2 minutes. Let's go ahead and do some momentum on this 4-hour chart. 4-hour chart momentum, guys. We can see the RSI is falling. We can see the RSI has developed some sort of local bottom structure over here. This is potentially good for a bounce, of course. And of course, our descending channel formation has been developed and is somewhat present over here on the RSI. So we are looking for a push upwards on the RSI. Potential breakout over here would be validating for a breakout of the descending channel. Therefore, we need a co-breakout of the RSI and the descending channel at the same time to validate the breakout and confirm the breakout for a continuation upwards. Until then, we do expect the prices to continue down. Remember, it is a downtrend, and therefore downtrend should be assumed, but we are at support. We are in a descending channel. The potential for a reversal is there, and therefore now we should open our mind to the possibility of a reversal and be actively seeking reversals rather than just expecting a trend to continue downwards forever, okay? This is not the time. We've been in a downtrend for 15%. We've been telling you we're going down for weeks and weeks and weeks now, okay? Now it is time to flip your bias. Now it is time to look for reversals. I'm not saying reversal is going to happen, but I'm saying shift your perspective. Look for reversals now while keeping whatever shorts you've got active, while keeping this knowing fact that we're going down still, looking for reversals at support, okay? Looking at the market cipher A on the 4-hour chart, we can see the price is under the moving averages, under the 50 MA, under the small time moving average, not looking very good, a obvious weak trend, an obvious downtrend. Moving to an hourly chart, we see exactly the same thing, guys. Moving up to a daily chart for that same moving average, we can see it is not looking good. We have broken below the 50 EMA, guys, on the daily chart. Small time frame videos are converging toward the downside. The RSI is definitely not looking very good over here, but a glimmer of hope as we have created a potential RSI divergence. This is a potential indication that, again, the support zone is going to be held, and this support zone is a zone of confluence and importance. So keep your eyes on that. However, like I said, structures will determine the moves, not indicators. Thus, a loss of this level will confirm that breakdown and continuation toward the downside. Moving back on that smaller time frame, let's take a look at the Gaussian channel. We can see a loss of the midline on the Gaussian channel. Again, some indicators over here are being quite different. We have, you know, indecision in these indicators. The Gaussian channel loss of the midline signals a continuation downwards. Like I said already, we are still in a downtrend, right? This is our downtrend. So technically, we can expect this to continue downwards until we have validation and confirmation of reversal. All I am saying is if we're going to get validation and confirmation of reversal, we are likely going to get it in this range, and thus we should open our mind to potential. But if we're going from a technical standpoint purely, we are now officially in a downtrend. Momentum's falling, okay? You know, the market cypher B. Momentum is falling. Momentum is in fact negative as well, okay? The price is under the 50 EMA, which represents a downtrend. We are pushing further and further away from 50 EMA, and the moving averages, the small moving averages, are coming closer and closer, signifying a strengthening downtrend. Not quite a strong downtrend yet. And more importantly, we have lost the midline on the Gaussian channel on the daily, which represents loss of that trend, and more importantly, initiation of a macro downtrend. This macro downtrend, like I said, could take us to those low levels, but according to the Gaussian channel, we will lose a Gaussian channel. So anything sub 2,100, 21,000 is expected according to that Gaussian channel. Anyway, I have taken this video way too long. I hope you enjoyed. If you've got any questions, leave them down below. Obviously, guys, there's so much to talk about every single day. I can't possibly talk about everything every day. So if I miss something out, don't write in the comments, oh, but you didn't talk about this. Guys, I can't talk about absolutely everything. There is 25 minutes to this video. I could go on for 10 hours if I really want to, but I talk about what I think is relevant for the day. Obviously, watch our prior videos and just look forward to the next videos. If you have any question and you want something talked about, just comment it down below. Hey, MegaWhale, could you check this out? And I'll take a look. But do keep in mind, I don't cover altcoins over here. I cover altcoins on the Telegram. You can also find us on cryptoacademycourses@gmail.com. That is our email address for our 10-unit course, where we teach you how to trade. All of the information we found here, go ahead and contact us for more information. I'll catch you guys tomorrow.